I locked in over $4,000 today trading only micro NASDAQ contracts. If you are struggling with consistency and profitability in either your personal or prop firm accounts, switch to micros. Stop trading minis. Now, if you saw my video yesterday, you'll know that we had a key retest of an 18,660 level pre-market that I had missed because I don't usually trade pre-market. However, with the stock market, you always got to adapt. And what did we have today? We had CPI at 830. We had this huge reaction, but eventually we settled down and we reclaimed this 50 EMA on the 5-minute chart. We also had a huge bounce off of that 19,000 psychological level as support. So I was expecting a move up. With that being said, we also had some liquidity on Bookmap above. So the game plan was enter micro NASDAQ contracts as we hold the 50 EMA and target that liquidity level above up to like that 19,200-ish level. For me personally, I find 3 micro NASDAQ contracts to be optimal. Sometimes I will trade with 2. It just depends on what kind of move I think we're going to get, and then also the volatility that we're currently experiencing. You should always focus first on how much you're going to risk for a trade versus always just focusing on how much you can make. Always remember that your losers are going to determine your overall success, not how big your winners are. You should be looking to gradually extract money from the market each day and compound that over time. If you just hit a huge winning trade or you see someone that has a huge winning trade, they're likely to give that all back in the days to follow. It all comes down to easy come, easy go. With all that being said, let's talk about this trade. As you can see, we're starting to get the movement in the direction in which I thought we were going to. We're pulling away from that 50 EMA, and I start to trail my stops to make sure I guarantee profit so the market does not reverse on me. And this is another one of the biggest reasons why you should use micros instead of minis, because you can scale out of positions. You can let your runners run while locking in profit at the same time. So you're not going to have as big of a variance between your trailing drawdown intraday, and you're also able to maximize the full extent of some moves. Minis, on the other hand, you will likely only trade with 1, maybe 2, so you can't really scale out of one mini contract. Therefore, you typically miss a lot of the moves. I know previously when I traded minis, I would get stopped out with my trailing stop. I would see the market continue to go in the direction that I thought it was going to go, and then I would try to get back in, and then I would get chopped up. So this whole issue is resolved by using micro contracts instead. I'll slowly trail out, and then I try to always hold one, not to give back too much of my profit, but to give the trade some room, knowing that I already locked in profit, and I'm just letting this one run to add on to the profit total for the day. And if you're using a company like Apex, you can have up to 20 accounts. So although a couple $100 for a trading day doesn't seem like a lot, when you multiply that by 10, 20 accounts, it can really add up over time. And then before you know it, you're able to consistently get these large payouts every month just because you're being consistent. Stop trying to focus on making a certain amount of money in 10 days and getting to pay out and like trading with these big sizes just to hit like that number. Just try to chunk away. $100 to $500 per day is all you need if you're trading with Apex. I have gotten over $36,750 in payouts from Apex so far. They've always paid me out. I've never had any issues, and that's because I'm consistent. I don't trade the immediate news candle. I don't use large size one day, give one winner day, and then, flip contract for the rest of the time. Every day, I'm consistent. I try to find these really good setups, try to let my trades play out, and I try to always lock in at least $100. Ideally, $300 to $400 a day is what I like to average, and that's really all you need, especially if you're trading with Apex. Just be consistent. Everyone could use an extra couple $100 a day, and then once you get some experience and you start getting some payouts, you can get more accounts, and you can scale this up all the way to 20 accounts, and before you know it, you can get to the point where you're having $40,000 or $80,000 months. So always think long term. It's all about preserving your capital and then just really focus on your risk management and let trades play out. Make sure the trades fit your setup and then execute them accordingly. If you are a newer trader or someone that's struggling with profitability, I highly recommend to wait to trade until the market opens. However, if you've been trading for a while and you kind of see how the market flows in the pre-market hours, then it can be worth looking for setups like this. Typically, you see more of a trend from like 8:30 until about 9 or 9:15. Obviously, this does not always happen. However, these are the patterns that I've been seeing over the past couple days, so I was able to take advantage of it today. Tomorrow could present a completely new opportunity. I will likely only take these pre-market trades that are like really clean and clear to me. Not always have they like this. Sometimes we just kind of chop sideways pre-market, waiting for the volume to come in at 9:30. So obviously I always have Bookmap pulled up on the right side of the screen here, and something that I've noticed that I think is underrated and maybe not talked about a lot is the removal of liquidity. So as you can see, the darker white the level is, the more orders are sitting there, and then as orders are pulled away, they disappear from the book. And what I started to notice around this time was at that 19,220 area, orders started getting pulled away. They were like added and then they were like removed. It was almost like a spoof. So once that liquidity got removed for the day, I was expecting downside. And this is naturally what I've seen is the liquidity acts as a magnet. So once that top side liquidity is removed and it's not there anymore, then we're more likely to hit that 19,000 level than we are to continue up to the 19,200 level. And everyone can be that Monday morning quarterback. However, I posted both of these on threads before the market opened. I said on the daily chart, I expected us to pull back a bit, and then I even showed the level of liquidity that I expected us to touch, and that's what my whole game plan was for the day. I will be trying to post these levels and the game plan every morning, so feel free to follow me on threads. And this is just something to take into account to get like an external perspective on how someone else is seeing the market. I do not run call outs. This is not financial advice, and I will never ever sell a program or a call out server. This is just my experience trading, and I want to share as much as I possibly can with everyone so we can all become better traders and continue to make money from the stock market. So what did we see when the market opened? We initially got a pop, got rejected, and then we started to hold below the 9 EMA, which is a good sign that the sellers are in control and we're likely to get a move to the downside. This is why I typically say the best entries are right around the 9 EMA. You can have a lot smaller of a risk and typically you get a lot more reward. And we still have this large level of liquidity of 19,000 on Bookmap. If that got removed, I would have probably changed my bias and been looking more for upside, but all the upside liquidity for the most part has been removed outside of 19.2. So I'm expecting us to hit this 19,000 level. As you can tell, if you checked out that threads post that I had pre-market, I actually thought we were going to come down and hit that 19,000 level and have more of like a doji day to where we, kind of bounce back up and stay within the range. I did start to see some market sell orders here, so I am anticipating getting in 2 micro NASDAQ contracts. I am being patient though. You can see that we are wicking quite a bit. And this is typically what you can see during like the first like 10 or 15 minutes of the market is you'll see buyers and sellers kind of having a battle here, trying to figure out which way it's going to go. But once this kind of area breaks, you'll start to see a pretty solid move. So if I could offer one tip of advice, it's always kind of wait and remain patient. Like I said, the best entry was close to the 9 EMA. We'd be drastically in profit right now. However, I missed it, did not get in there because it's been wicking around a lot. So just kind of remaining patient. A lot of traders make the mistake of they aggressively have like a market sell order right here and then the trade immediately comes back up against them. I like to remain patient and I always try to enter my shorts on the ask. That way I get a little bit better of a price and you're not just stuck with whatever market price that it decides to fill you at. So again, we're still not in. just being patient. We're waiting. If you kind of market it in right there, you might be a little worried about this wick, because you also got to worry about the lows over here to the left. At this point, it does look like the sellers are in complete control, so I'm waiting for a little bit of a pullback so I can hop in here. The CVD is continuing to go negative in the red, so as soon as I get a better entry, have price bounce back up a little bit, I'll be looking to get into my short position. So as always, remain patient. The market, even though it doesn't seem like it, if you're like missing a move, there is always another opportunity to get into that move. You very rarely want to hop right in after a big flush, especially if it's near the bottom of like a 5-minute candle. So you always want to wait for at least a little bit of a wick here and see that the sellers are coming back in to hold this price down, and the buyers aren't just initially going to pop it right back up. So we get in here. We are in 2 micro NASDAQ contracts. Like I said, 2 to 3 is ideal for me, at least how I trade and how I'm able to manage my risk. And I'm just going to trail this down. Once we really start to get a move in the direction, I will break this up into 2 separate individual stop orders. That way I can try to let one run, and then I'll start to lock in some profit with the other one. So I just gotta be patient. It's holding below. Sellers are still coming in. You can see on the book map, it's just more selling. CVD is continuing to stay negative. So just kind of be patient here. A lot of people would just immediately kill this trade. Oh, I saw the profit. We are entering that level where we had like a previous bounce in the pre-market, but just kind of be patient. We locked in 1 contract right there, and then we're just going to follow this. This is something I've been working on, just kind of, especially with micros. If you just let them run, you can make a lot more than you think. You know, each contract for each of these positions that I was doing today was like 50 to 80 bucks per contract, and in the morning I had 3 of them, and I just had 2 right there. So yep, stopped out of that. You'll see we do get like a little bit of a pullback here. It does bounce back up. You can see like some buyers are trying to hold this area, so I just took my profits for the day, locked it in. As I previously mentioned, it was right around $215 to $220 per account. So it doesn't seem like a lot, but that's a $4,000 day. 1 day closer to this $40,000 month with Apex. As always, I'm gonna record daily recaps. I'm gonna try to post on threads every morning certain levels that I'm looking at and what my game plan might be. So feel free to check that out. Comment below if you had any issues today, if you made profit today, and what levels you might be looking at moving forward. It does look like we got a little bit of a bounce later in the day, so very curious to see what everyone has to say.